Mr. Piramal, thanks so much for joining in and taking the time out. You know, we just trying to understand, aside of a handful of 8 to 10 stocks which are doing very well in the market is punishing everything else that is coming its way. There has to be a reason why some of these stocks such as yours are being favorably looked at.
I think we've always had very high, and I think going forward also the same trend should be there. The returns should only be better. Of course, when we come to a time when we don't have any debt at all, then the ROE and the ROC will be more or less the same. But by and large, the trend is very good, and we should be having something like 30% plus return on capital employed. And basically, our business model is very good, very enviable. I mean, I think it would be the envy of any business person. And we have we require hardly any capital for expansion. And the cash accrual is fairly good. Our dividend payout is very good. So all in all, we have a very small balance sheet in relation to our sales and our profits. And I mean, that's the strength of our business model.
But which is the point, Mr. Piramal? I do not think have any kind of fundraising requirements. You are in the process of reducing your debt, as you have yourself come and said. How would these figures be over the next 6 quarters, say end FY13, from your current return on equity or return on capital employed? How much do you expect to scale it up to?
Well, it would go up by, let's say, it can go up by about 5 to 10%. And ultimately, it also depends on the margins and all. So far, the margins have been good, and there is no reason why we cannot maintain these margins. But we've had a good run, and the trend is continuing. So we should be able to better our margins.
All right, Mr. Piramal, analysts believe that a shift in the luggage segment from hard to soft luggage would also help drive your margins higher. Do you agree with that? Could you throw more perspective of how the contribution to margins will? Yeah.
In fact, that's the basis of our sales and profitability increase. Because hard luggage hasn't been growing at all, I would say, in the last 15 years. It's only now that we are pushing it a little bit more, and the base has become so small that there is some growth. But basically, it's been entirely the soft luggage which has been growing. For example, at the beginning of this century, our soft luggage was hardly less than 10% of our sales. And at the moment, it's nearly 2/3 of our sales. And that is a very profitable part of our business. So we don't have any manufacturing costs there. And manufacturing overheads are very high in India, and particularly in our company, because we are an old company. So the labor cost, etc., is quite high. And I mean, that is the basis of our growth, has been the soft luggage story.
Sure, but going forward, I mean, are you looking at scaling up in any way through the inorganic route? There is buzz that you're looking out for an acquisition.
No, not really, because I believe that sales is vanity and profits are sanity. And in the inorganic route, for one thing, there are not too many players around. And just for getting some sales at a very high cost is not really worth it. So that's not our emphasis. We would rather than inorganic growth, we would have inorganic growth by new product lines, which we will launch ourselves. And it's too early to talk about that, but that is what our long-term planning is. And we have a host of ideas. First of all, I mean, the first thing would be ladies' handbags, which we will launch in January. And apart from that, we have several other ideas where we can strengthen, where we can use our strengths of good sourcing and active marketing and wide distribution. And everything sort of falls in alignment. So I think that will be the better growth story for us rather than trying to acquire more luggage companies.